Hello, this is Ahura from Otetmarkets. We'll be with you with a short review on Federal Reserve meeting decisions and market reactions. First, let's check the decisions and what we had, and then we will see how market reacted to these decisions. Market, first of all, let me bring this. Okay, here are the decisions and economic calendar we had. As we widely expected and market widely expected, central bank didn't change its interest rates, and it's again between 5.25 and 5.50%. As mentioned, it was widely expected, but focus was on the dot plots where FOMC members could express their outlook on economic growth and interest rates. Let's check the dot plots and overall their projections on inflation and interest rates. If we compare the expectations that they had in this meeting with what they had on March meeting, we can see how decisions and expectations were more hawkish than market expectations. Unemployment rate average is 4% for this year, which it was also 4 at the previous meeting, but for 2025 average unemployment rate expected to increase to 4.2%, which it was 4.1% in previous meeting, and for 2026 is expected to grow to 4.1%, which it was 4% in previous meeting. That means weaker job market. On the inflation front, PC and core PC, both of them, the central bank members, they increased their estimate by 0.2%. PC expected to average 2.6% in this year, which it was 2.4% previous meeting, in previous estimates, and only in 2026 it's expected to fall to its 2% targets. The same changes we can see in core PC price index as well, which is expected to average 2.8% this year, which it was 2.6% in their estimates in March meetings. That means that central bank doesn't expect inflation to fall that fast, but yeah, they expect to see the inflation much lower at 2% in 2026. But for now, they do not expect to see the inflation to fall so fast. So if we go and check the Federal Reserve interest rate projections, now FOMC members, they see only one interest rate in 2024, which it was 2 or possible 3 interest rate cut in 2024. So now the FOMC members, they expect just only one cut this year with about 25 basis points. So which means this year interest rates will be much higher than previous estimates, especially if you compare it with what we had at the beginning of the year. For 2025, also estimates has changed. Now we averaged the interest rates is averaged at 4.1%, which it was 3.9% in March meeting. Overall decisions and outlook is more hawkish than previous estimates. That helped the estimates for, if we go, yeah, here is the CME group chart. The first interest rate cut we expect to be happening in September. Now it is more than 56% possible, which it was more than 60%. So yesterday we had US inflation data as well. In May we saw the inflation didn't increase, CPI and core CPI increased by 0.2%. Both of them they were less than estimates and market expectations, which means market reacted so somehow market thought that okay, with this inflation not data that we have, probably the Federal Reserve also will have more dovish stance, which it didn't happen. But first of all, before the Federal Reserve meeting, the possibility of interest rates cut for 25 basis points increased by more than 60% after inflation data. But right after the meeting, when market understood that the Federal Reserve decision will be on further data, and now they did not expect more than one rate cut this year. Again, the interest rate cut possibility for September fell to 55-56%, and it's helped to reverse in the US dollar chart as well. If you go and check the chart, here's the chart. We can see this is the US dollar chart. As mentioned earlier, after yesterday's inflation data, US dollar fell sharply, but right after the Federal Reserve meeting, it could regain some of its losses, and now US dollar again increasing towards 105 mark. For now, we don't expect more weakness in US dollar chart, and still we expect DXY to move between 104 and 105, and not less than this for now. That's same reaction we had in the stock markets as well. If you see in the stock markets, right after the inflation data, stock market increased, but after Federal Reserve meeting, we had a pressure on the stock markets, which is expected to continue pressuring this trend today as well, especially if we have today, we will have the PPI numbers, producer price index. PPI will affect the market with a little bit delay. So if we have higher PPI today for the May numbers, which it means in June and July we will have a higher CPI as well. So this estimates of the higher rates for longer time will have a more chance. So in that case, we can expect more pressure on the stock markets and higher US dollar, and vice versa. So for now, with this decisions that we had last night yesterday in the Federal Reserve meeting, we can expect uptrend to stop at these levels and even start to give back some of its gains. But for further movement, today's PPI number will be very important to watch. This overall market reaction and data, and how what we had in the dot plots, and how market reacted to this data. If you have any question, please don't forget to write down under this video, Instagram or YouTube. I will try to get back to you as soon as possible. See you.